All right. Hi, everyone, and welcome to Thursday's Currency Call presented by Forex Trading Asia. Thanks for joining us all live, to the LCMS Traders Club members as well. And there is a little bit to go over as well. There was quite a lot of news, but just to get to the introduction, for anyone new watching as well, this is the Currency Call, and it's presented every Monday to Friday at 11 a.m. GMT +8 time zone. And the currencies we analyze are as follows. So on Monday, we do the Aussie and Kiwi. Tuesday, we do the Euro. Wednesday, the Pound. Today is Thursday, and that is Yen and Gold. And then tomorrow, CAD and Crypto. And it is the 25th. So a month to Christmas now already. It's flown by. So the 25th of November, and it's episode 426. And this currency call, we aim to inform the viewers about the key economic events that are taking place. And we also go into key support and resistance levels, trade ideas, and of course, much more. And the currency call will be very beneficial to both the long-term investors and the short-term traders too. And we'll go through what could move prices, possible trade ideas, and we'll be highlighting the potential targets for those trade ideas and the risks as well in regards to stop loss placement. Now, a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering in any trades as well. And feel free to ask questions during the call and also in the LCMS Traders Club. Now, we do have the Real Slim Gimme here as well, nickname change update, and a little bit to go through for Gimme. There's the RBNZ, and there's also the FOMC meeting minutes that came out very early this morning in our time zone. So over to you now, Gimme.
Thanks, Scott. Welcome to another episode of Constructing and Drilling with Gimme. The drilling noise is killing me. Okay, let's go. First thing first. So yesterday, the RBNZ has increased in interest rate by 0.25%. All right. So like I mentioned yesterday, it was a bit of a disappointment. Okay, because parts of the market was actually expecting a 0.5% hike in interest rates. However, they only gave a 0.25%. All right. So it's supposedly a dovish hike. Okay, but I will show you guys that this is not that bad actually, and why they actually carry out just a 0.25%. All right. So the first thing, I'll just do a quick search. Annual CPI inflation. Okay. So in the, by the way, I'll be providing all these links so you guys can actually refer to, after the call, okay, if you guys want to. So the first thing to highlight here is, the central bank actually highlighted that annual CPI inflation has increased to 4.9% in New Zealand, way above the committee's 1 to 3% target, okay? And the measures of core inflation has also increased into the top half of the target band. Okay, so which is why we are actually seeing the RBNZ carrying out active interest rate hike, okay, for the past 2 meetings, okay? And we can actually expect more to come from the central bank, okay? And the committee noted that the inflation is expected to remain high in the near term. Later on, I'll show you guys the projection materials, okay? Then you guys will know what they mean by, expected to remain high and then coming back to the midpoint target, okay? So first point, inflation is way beyond the central bank's target, okay? Hence, they need to increase interest rate to to tame inflation down, back down into the 1 to 3% range. Okay, so that's the first point. Second point, it's actually regarding housing. It's regarding quantitative easing. SEP. Okay, so we know that back in July, the central bank actually halted, put an end to the purchase of bonds under the large-scale assets purchase program. All right, but is that the end of it? Not really, right? Because remember that the bonds are still being held by the central bank. So what they would want to do eventually, is to sell it back to the market. I mean, they can't just hold on to it forever, right? Okay, so over here, they actually mentioned, okay, they say that committee expects to gradually manage LSAT bond holdings down in a way that maintains the smooth functioning of financial markets. Okay, so more details on how bond holdings will be reduced will be provided early next year. Okay, so probably like during the first or second meeting next year. All right, we can actually, or we have to pay attention to, what's the central bank's plan on the reduction of the bonds holding under the LSAT program. Okay, because well, long story short, the faster they can, release all these bonds holding, okay, the better it is, okay, the stronger, well, the more bullish it is for the New Zealand dollar, okay. So that's the second key point, all right, LSAT program and when, they're going to reduce their bonds holdings. Now, the third point here is, wait, where is the housing price? Oh, house prices, okay. So, I've mentioned this several times already, okay? Housing prices in New Zealand has been rising, has been rocketing, okay? It's really going very hot, all right? Because with the all-time low interest rates, hence, motivating people to actually take up more housing loans to, carry out more transactions, okay, in the property market. The committee also talked about this as well, okay, and based on their assessment, house prices are unsustainable, okay, unsustainable, it's way too high, all right. Members noted that higher mortgage interest rates, continued strong home building, tighter lending rules, and changes in tax settings should all act to moderate house prices over the medium term. But as of now, it's still high. And they also discussed that the risk that the house prices could keep rising in the near term, increasing the risk of a sharper fall later, okay? So hence, with these, unsustainable house prices, they concluded that continued increases in the OCR, which is the interest rate, which is the jargon they use to call the interest rate, all right, are expected to support more sustainable house prices. So we can actually expect more rate hikes coming in from the Reserve Bank of New Zealand, okay? And now, one more thing that we should be paying attention to, or rather, should I say, one more thing of concern is that how fast will interest rate be hiking, right? Because for yesterday, the market was actually expecting a 0.5% hike, okay, a more aggressive hike than the carried out 0.25%, okay, but that didn't happen, all right? So it's something that we want to, hear from the central bank to get a clearer understanding, clearer communication. So let me account primary. Okay. So the central bank, okay, they did discuss, okay, in fact, Governor Orr actually mentioned during the press conference that the central bank was actually considering a 0.5% hike, all right? But then because of the, they want to take things one step at a time. And so eventually they decided that a 0.25% hike is more, I would say, preferred, okay? So over here, it says that they have discussed how interest rates need to be increased, okay, taking into account primary and secondary objectives of its remit, all right? So higher starting point of inflation and capacity pressures and the risk that higher near-term inflation becomes embedded in price setting behavior were discussed, okay? However, all right, see, express uncertainty about the resilience of consumer spending, business investment as the country adapts to living with COVID, okay? So I think it was on Monday, okay, New Zealand's Prime Minister Jacinda Ardern, okay, actually announced that Auckland's lockdown, okay, Auckland's currently in lockdown, COVID lockdown, all right? So Auckland's lockdown will actually be lifted on, from, I think, the 3rd of December onwards, all right? So they decided to do this whole thing called living with COVID, okay? So Ardern decides to just drop the whole zero COVID cases policy and, just transit into living with COVID. So, with this whole living with COVID thing, they can actually expect, further rise in cases. So hence the COVID uncertainty. Okay, so because of this and the uncertainty of consumer spending and business investment, the committee actually felt that it's probably better to just like I mentioned earlier, take things one step at a time. Okay, increase interest rate by a small steps, like 0.25%. Okay, instead of making a big jump like a 0.5%. All right, so yeah, from now on we can pretty much expect, or rather should I say the market will probably expect a 0.25% hike of interest rate, okay, for the upcoming meetings instead of a more aggressive 0.5%. All right, so now moving on to the quarterly projection materials. All right, you can just go all the way down. So, with this whole supposedly dovish hike, is it really that bad for New Zealand dollar? Okay, maybe for the short term, okay, in the short term, for now, yes, it is not very good. Okay, we are still seeing weakening of the New Zealand dollar, okay, because of this dovish hike, all right? But in the long term, okay, in the medium to long term, okay, because we are coming to the end of the year, we can see, okay, if we were to actually look at just 2022 itself, okay, under the OCR column, official cash rate, we can see that, on a quarterly basis, the RBNZ is actually expecting interest rate to hike, okay? And by the end of next year, okay, the fourth quarter of 2022, we can see that they're actually expecting interest rate to be at 2.1%, okay, which is very good, right? Why is that the case? Now, if we were to look at this row over here, okay, 2019 March, the very first row over here, we see that OCR was at 1.8%, okay? Going to 2.1% by the end of next year will mean that, it's actually doing better than pre-COVID, okay? So this is actually something, I would say a very hawkish, projection coming from the central bank. Of course, like what they mentioned, with all this uncertainty on COVID and, the resilience of business investments and consumer spending and things like that, the projection material may change from time to time, all right? But if let's say, just suppose that the economy gets better and better each time, okay, moreover, Auckland, New Zealand has decided to lift the COVID restrictions from Auckland, okay, that will definitely encourage more business activities, okay. With all this factoring in, there is a good chance that 2022, we may actually be seeing the New Zealand's interest rate go beyond the pre-pandemic level, which is, let's say 1%, okay. You see over here, 2020, March, they actually cut it to 0.9 and then 0.3, an all-time low, 0.25 to be more specific, okay. So overall, it's actually a good thing, all right? Overall, it's actually a good thing for the New Zealand dollar in the medium to longer term, okay? So with that, let me see if there's any other. Okay, one more thing to note is that, because we were talking about inflation just now, right? So inflation is actually expected to, where is the figure? Expected to peak by the end of 2021, okay, which is the December quarter. Okay, under the CPI inflation annual column, we can see that inflation is expected to be at 5.7%, okay, by the end of December, okay, and then in March it will stagnate at 5.7 as well before coming back down, okay. Now, although for 2022, for the whole of 2022, inflation is expected to reduce, okay, to decline steadily, I would say 5.7, 5.2, 4.0, 3.3, okay. But 3.3, to be honest, is still above the central bank's target of 1 to 3%, okay. So this is actually I would say a stronger reason, okay, why the RBNZ will have to continue to look into a hike in interest rate, okay, basically to tame down the inflation, the ever rising inflation rate, all right. Back to the the target 1 to 3% target sustainably, okay. So yeah, inflation, we have interest rates, we can expect more interest rate coming in from the central bank, although at a small steps of 0.25%, okay. All these will likely translate to a stronger New Zealand dollar in the medium term to longer term. All right. So for now, entering the festive season mood period, we may not actually be seeing, we may actually be seeing lower trading activities and volatility coming in. Okay. So maybe, New Zealand dollar may actually stagnate or weaken slightly further. Okay. Due to the dovish hike yesterday, okay? But starting from next year on, if the once the Auckland's COVID restrictions has been lifted, okay, in December, we can actually expect more economic activities in New Zealand, okay? Hence, we will pay attention to the quarterly data releases coming in from New Zealand, okay, and see how it goes. If it performs well or at least maintained at the current level, then yeah, all will be good for the New Zealand dollar. All right. So with that, the RBNZ will be meeting again probably in December. Yeah, I think it's in December. So we'll see how it goes. Okay, I'll update you guys again when the meeting comes near. All right. So with that, I will move on to the next item on the list, the FOMC meeting minutes. This is a crazy 12-page long, minusing this first and second page, it's probably like some 10-page long of words, okay? No graph, no charts, no pictures, nothing. But, okay, the key point here, like I mentioned, okay, many members have been sharing their thoughts on QE tapering pace, okay, the pace of QE reduction, okay, and they actually expressed that we should actually be considering a faster pace of QE tapering during the December's meeting, okay, which is next month. All right. So they didn't really share much on, the conditions, the criteria in order for them to increase the pace. Okay. However, over here we see that, okay, some participants preferred this is bad. Some participants preferred a somewhat faster pace of reductions that would result in an earlier conclusion to net purchases, okay? Of course, they have to put this disclaimer over here, right? Participants noted that beginning to scale back the pace of net asset purchases was not intended to convey any direct signal regarding adjustments to the target range for the federal fund rates. So basically, what they're trying to say is just because we have started QE tapering does not mean that we have started to plan for an increase in rate hike, okay? As usual, they have to put this disclaimer here. Otherwise, you'll be seeing US dollar skyrocketing to the moon and things like that, all right? So it's just to, just to calm down the market a little, but, for us, we know for sure that, once the tapering ends, we can actually start to expect interest rate hike, okay? So over here, they have further emphasized this point, all right? Various participants note that committee should be prepared to adjust the pace of asset purchases and raise the target range for the interest rates sooner than participants currently anticipated if inflation continued to run higher than levels consistent with the committee's objectives, okay? Well, recent inflation data has shown that prices in the US has actually rose to a 30-year high level, okay? So, employment side of things, we are actually seeing quite good figures coming from the non-farm payroll reports, right? With previous data being revised upwards and, the current month data not being too shabby, okay, we can actually expect, employment to probably by the end of, probably by mid-2022 to hit the maximum employment condition criteria, okay, of the Federal Reserve, okay? It's the inflation that we are, I wouldn't say it's more of concern, but because of the rising prices, okay, that may actually motivate, that may actually push or pressure the Federal Reserve to, increase the speed, increase the pace of tapering, okay? So that is the key point, all right? So yeah, we have heard from Vice Chairman Richard Clarida and some of the other members like Christopher Waller, James Bullard, Mary Daly on, we should really consider an increase in pace of QE tapering, okay? So yeah, with these the next meeting in December, okay, we will be seeing the Fed will be releasing the quarterly economic projection materials. Okay, so we will have to pay attention to the dot plot, okay, because we may actually be seeing an earlier timeline projection of interest rates from some of the members. Okay, so that will be in December. Okay, for now, my view on US dollar is still going to be bullish. Okay, I'm still going to be expecting US dollar to be bullish until next month. Okay, and if they were to carry on being so hawkish, like say for example, shifting the timeline of interest rate hike earlier, okay, or even hopefully, okay, increase the pace of QE tapering, then okay, we will really be seeing a good year for a good way to end the year with a bang for the US dollar. Okay, so with that, is there any questions?
No questions, nothing.
No questions,
That's
nothing. Good. Okay, great. So with that, I will hand it back to Sherminator. I'll be back.
Thank you very much, Gimme. I forgot I do like the nicknames, the real Slim Gimme. Now, so Imran, I think we answered that question as well, and it's definitely it's good to bring up that situation, but I think that's probably answered for now, really. And just to get into the US dollar here, guys, as well, there was a lot of news to go through, so I think Gimme did a pretty good job at keeping that as condensed as possible. It was for the people that did hang around and did trade. Jin and I were around last night. It was just a little bit bizarre because we've had such an extension on the US dollar, and we are seeing it roll over now. This is the 1 hour time frame, and I've just got just a line here just to signify a little bit of support that I'd be looking at, seeing if it does test. I mean, obviously 96.50, there was a little bit of buying down there, 96.40 as well, that sort of area. And there's obviously no news out for the US because it is Thanksgiving, and happy Thanksgiving to everyone as well for later into the day as well. Hope everyone has a great day. So frankly, it could really be an opportunity just to, with this situation, it just means there's reversals at play. But again, especially later into the session with the US market being closed, liquidity is going to be a bit lower. So it's a weird time to be participating. And what can happen is that I remember this back in 2018 in January, where markets were really, really sluggish. You can get some flash crashes where what happens is there can be a mistake made and someone enters the wrong size, and it's not, I guess, absorbed by the market because liquidity is so low that it can really lead to some quite vicious whipsaws as well, which just mean, you could be correct about the direction of the trade, but a wick can obviously take out a stop loss, or even let's say you don't have a stop loss on, you'll be margin called by the broker because if you are using, bigger size or so, the trade is closed out by the broker. So be cautious about that, especially if you've had a good week as well. And in regards to the US dollar, the news obviously was discussed in detail. And I think that if you haven't already, make sure you check out the morning market update. I had a few discussion points about, personal spending, and there was some pretty good news releases out for just the US economy and how things are looking. And I have to agree with Kim Hong about the bullish thesis too. I have a long-term short on the Aussie dollar, technically with the Forex briefcase investment that I do have, and make sure you check it out, guys. In the background here is how we've performed so far, which just means that sometimes it's good just to be on the sidelines, but at least you've got some exposure to the US dollar strength as well. And we are seeing that, really, that was quite, honestly, I thought it was going to consolidate. It didn't. So something has to happen here where we do see either a bit of a pullback, and then that would probably be healthy to see, considering we've got tomorrow will probably be a bit slow as well. So just be mindful of that, guys. And we've got a lot of trades coming up as well. We've got the yen and gold to discuss as well. So we've got a few pairs to go through now, and we'll just see what is going on with the yen and gold now with Jim. But again, just be mindful of the situation, and now's the time maybe just to pause and just review things and maybe do some back testing. But we've got Jin here with the yen and gold now.
Thanks for that, Scotty. I think with that last line you've just said, it's exactly what we should be doing right now. Take a breather, enjoy Thanksgiving. I think the next 2 days we'll probably see like similar to what we saw last week. The last 2 days of last week, I think will happen again this time around, where we're going to see a bit of a retracement on the dollar. We're going to see some profit taking. We're going to see that lower volatility, which actually makes the analysis on the yen pairs a little bit harder. Why do I say that? Is because if you check out the economic calendar, what you'll notice is that today being Thursday, scroll down to Thursday, we've got a whole bunch of news, but we spoke about the Eurozone news and data and members speaking. Nothing else coming from, well, the US is on holiday, so nothing coming from them there. On Friday, again, you can see that we do have some yen CPI numbers, but these are not big price movers as usual. And then following on from that, not a lot of news on Friday as well. So really lacking that news events in general from the market at this point. Looking into next week as well. So from Monday onwards, and the focus is on the yen pairs at this point. You can see on Monday, we do have a whole bunch of news, but very low impact news. It looks like next week will be a Canadian focus. We do have a whole bunch of Canadian news to be released. On Tuesday next week, Aussie, Kiwi, we have Japan numbers, employment numbers here, but again, not big price movers. Following on from that, a whole bunch of news, Eurozone CPI numbers, Canadian GDP numbers again. I'll tell you more about the Canadian dollar tomorrow morning. But at this point, still the focus on the yen pairs. You see a lot of news, but not big impact news. On Wednesday next week, we have the Aussie GDP numbers, we have the UK numbers, we have non-farm payrolls, ADP non-farm payrolls on Thursday, and then on Wednesday, and then on Friday, we have the non-farm payrolls to be released, the US non-farm payrolls and the Canadian employment numbers. So at this level, what I'm looking at is, we're probably going to see that retracement on the dollar index, like Scott was just sharing with you. At this point, you might want to take a bit of a breather. You might not be entering a lot of trades. If you do want to jump into some trades, it will probably be very short term. We're going to see that retracements. How it will look like on the charts is the US yen on the H4 time frame here. I still do think we're going to see it track towards that 115.83 resistance level, but we might see a small retracement now or into the next couple of candles or over the day before a final push upwards towards 115.83. Not a great trading scenario at this point, because at the maximum you have about a 50, maybe 60 pip take profit level, but it looks a bit skinny. If you have to push out a trade, it wouldn't be on the H4. You might look at it on the H1 time frame for that push towards 115.83. I'm struggling to give you an entry. I would say about 115.30. Above 115.30, a tight stop at 20 pips for about a 40 pip take profit, 1:2 risk reward ratio towards the upside. But bear in mind, this is going to be very, very short term, something you're going to manage a bit closely. With that said, what holds interesting is the euro yen here. We've seen it drop over several weeks. Consolidation, drop, drop, drop. And then now it looks like a small retracement at this point. Likelihood is that if you wanted to try for a counter trend trade, we could see whether it closes above 129.51. If it closes above 129.51, you could have a 50 pip stop loss for about almost 100 pip take profit level towards the 130.44 resistance level. But bear in mind, this is going to be counter trend against a multiple week downward move. 1, 2, 3, 4, 5, almost 5-week move. You're looking for that bounce back up. Why I'm suggesting you could try a counter trend for that move there is because I'm anticipating something similar like what we spoke about in early October. We saw that break, we saw that test of 128 level before that bounce back up. It looks something similar right now. We could see that bounce back up towards 130, similar to the pattern here on the left. But bear in mind again, counter trend trade. With that, the pound yen sitting, it's been sitting at this 153.74 level for the whole week. It's been testing that for the week before. It's been failing to break above that from the week before that as well. This is a critical level. I think that you can look at it as a bit of a straddle. For it to break on the other side, you could have short-term trades, but the best suggestion for the pound yen at this point will be to stay away. Stay out of the pound yen. You have seen a lot of spike ups, a lot of spike downs, but no real direction. The most likely scenario here is that if you forced a trade on the pound yen, you will probably get stopped out because you'll be tempted to keep your stop loss quite tight. And for the pound yen, you're looking at a 70, 80 pip stop loss before you could try for that move towards the resistance, or to sell it down, you'll be looking at a close to 100 pip stop loss. At these levels, I wouldn't be jumping into too many trades on the pound yen, especially without a clear direction and no clear news drivers to push it in either direction either. But with gold, the last time I spoke about gold, I said it was going to sit across to test higher. With the way US dollar has been performing on that pretty much upward move or trajectory, gold has gone in that inverse. It's gone towards that 1777 level again. At this point, what I think again, you could almost just move this line downwards like that. I think we're going to see a consolidation. We're going to see it test 1777 before tracking back up again. We might see actually, I'll do it a little bit differently. I'll say it's going to track up a little bit because of that retracement on the possible retracement on the dollar index, on the dollar strength. With the holidays over the next couple of days, we're possibly going to see it move up a little bit. Looks like a good buying scenario here for the longer term move back towards that 1896 resistance level. But we can see that for gold, if I zoomed out, this is on the daily time frame. It has and it likes trading within this 1777 to 1896 range. Once it gets inside, it stays within this range for an extended period of time. So I'll be looking for that scenario to continue and also to take advantage of. With that, I'll pass it back to you, Scott.
All right, thanks for that, Jin, as well. And guys, don't forget, we do post a video later in the day. And I would recommend that, just given the slower market conditions, even if you have watched the whole video right now with the currency call, to definitely revisit it and just to remind yourself of, what's going on, the news events that are coming up as well, just to sort of pay attention to what is going on. And I noticed, Evergrande, there was a $300 million block trade made today for a 20% discount as well. So what we might see here is that it just slowly gets taken care of as well. And the CEO government the government might force the CEO to just keep selling his assets. And I'm sure he's got a lot overseas to just make sure this thing doesn't go bankrupt. So stay tuned for that, guys. But I'll stop. Thank you for watching and hope to see everyone tomorrow for the CAD and cryptocurrency. Thanks for watching. Bye, everyone.
I think we got the hint from Jingwei when he stopped the recording just then. That's a clear hint. It's like, be quiet now, guys. All right, see y'all. Bye-bye.
Bye, everyone.